Any idea about the leasing?
Yes.
Tell me.
It's a rent, like agreement between the tenant and the owner of the assets.
Is that? Yeah, it is. It is. See, there is a good difference between if you are taking it on a rent and if you are taking it on a lease. Okay, if you are here also you have the financial obligation. Here also you have the obligation. Okay, for obligation to pay. But only thing is the most important difference is here you have the concept of right of the use of asset. Here also both are same. Okay, here also both are same, but you have the you are going to identify. Here we are going to treat it only as a rent expenses. Okay, only in the income statement of profit and loss account. But what will happen here? We are showing it as a statement of profit and loss account, in is that as well as statement of financial position. In here we will take into consideration. Is it right? We are talking. We here what we are doing. We are talking in terms of interest payable. Is it interest payable on the lease obligations? Plus, we will show it if it is more than 1 year. We are going to show it as a non-current liability, as a current liability, as well as we will show it as a non-current asset, as a right of use of asset. Okay, this is the most important basic difference. Okay, you can put a clear difference like this. If you are taking it into on rent, you have to pay only the expenses. That's all, rent expenses. But if you are taking it on the lease, okay, we have a good amount of working is there. IFRS previously it is IAS 17. Now they have made a little bit more clarity. They have not changed anything, but they have given more clarity with respect to IAS 16. Sorry, IFRS 16. Okay, that is the basic difference. We will not cover rent in any of the topics. Okay, in any of the topics we will not cover rent. There is no standard for rent, something like that. But if we take the lease, there is a clear cut standard is there. Okay, are you clear about this?
Yes.
There we are, what you are doing, we see in the lease, you have taken the lease, you have the right of use of asset. You have taken the lease, usually more than 1 year. You take the lease, you have taken 2 years or you can take it 5 years. Okay, then you will have the right of, for 5 years you have the right. Nobody will question you. You can do anything. You can use it for yourself. You can rent it to other. Can lease it to other people. You can have a lease. Okay. You can sublease to other people for doing the business. You have the right of use of asset. Nobody can influence you. Okay, and you will have the lease liabilities. What is the amount you have to pay? What are the exemptions? Okay, well, exemptions and recognition criteria for leases in the records of the lease. What are the how it should be treated? Okay, how it should be treated. There is one concept is called as a sale and lease back transaction. You are selling your own asset. Okay, very interesting. You are selling your own asset. Okay, you are selling your own assets, and again what will happen when you sell your own asset? You will get cash. Then you will lease that asset, lease the same asset. Okay, same asset. Okay, now same you are selling the asset very specifically. You are selling an asset for 100,000 and you are taking the same assets on a lease. Okay, on a lease. And how much you will pay monthly lease payments? You will pay monthly lease payments of 2,000. Okay, the advantage is you will get the cash, and most of the people will do this. Most of the people will do this, selling an asset. Okay. Now the person who is owning the asset, okay, who own the asset, he is called as a lessor, and who is going to use the asset, okay, use the asset is going to be a lessee. Is a lessor and lessee. Okay. Now this chapter is new. It is not previously we have covered this in financial accounting. Okay. The principles are gained is also it will help us in SBR. Okay. It will give you some useful information for audit and assurance. Okay. This is given in everywhere. Okay. Now we are talking in terms of IFRS 16. Lease, lessee accounting and sale of lease back. Here we are not talking about the lessor accounting. Okay, we will use in SBR. Okay, in SBR there is a lessor accounting, but it is not there here. Okay, it is not there here. Now, are you clear about this?
Yes.
Okay, what is the thing? Simple, very clearly. Okay, now that is the reason I asked you in the beginning. Then you will have more clarity. A lease is a contract, okay, a part of the contract that you have conveyed right to use an asset. You are taking it on a lease, okay. You have the right to use an asset, underlying asset, for a time in exchange for consideration. You have to pay the obligation. Lessor, there are two people are there. One is the lessor and another is the lessee. There are four things we are covering here. What are the four things we are covering here? What is the lease? Who is the lessor? What is the lessee? And most important, right of use of asset. Okay, right of. There are four things. Okay, now. A lessor is the entity, okay, the entity that provides the right of use of asset for a period of time for exchange. They will receive, okay, these people will receive the lease payments, okay. This is an owner. Initially he was owner, okay, he was a owner. Lessor is the owner, then he will give it for a lessee. Is it automatically the control will be transferred. Who is the lessee obtains the right to use, okay, you use the underlying asset for a period of time, 5 years, 3 years, whatever it is, but not less than 1 year, okay. Less than 1 year is a short term lease, okay. There is a separate rule is there for that, okay, for a period of time in exchange of consideration. Here you have to make the lease payments. Okay, you have to make the lease. A right of use of asset represents a lessee right. Is it? It is the person who is you as taking the asset on a lease to write and use underlying asset for the lease term. Okay, you have the lease, you have a lessor, you have a lessee, you have a right of use of asset. Okay, now when you are talking about the lessee account, okay, the one, assume you have taken it on a lease. You have taken it on a lease. At the beginning of the lease, the lessee in the beginning, you should know what is the lease liability. How much you have to assume you have taken it for 5 years. In the beginning, you should know what is the lease liability every year. Okay, every year. Okay, every year. We will not calculate every month, never. We will only calculate on a yearly basis. And the right of, once it is a liability, proportionately you have the right of use of asset. Okay, right of use of asset. At the commencement, you should know what is the liability and what is the asset. How we are going to initial measurement of the liability? It will be measured at the present value of lease payments. The present that have not been paid. What is the present value? Means we are going to calculate the lease. Is right? Assume you have taken it for 1, 2, 3, 4, 5 years. If you have taken it to 5 years, what will to calculate at the beginning, initially, okay? Initially, you will calculate what the present value of lease payments. That have not paid, is it? In the year zero, okay? In the year zero. Okay, what are the lease payments? Include fixed payments, amount expected to payable, any residual value guarantees at the end of the year, at the end of the lease payment, anything we have to pay. Is there option to purchase the asset that is necessarily certain to see what will happen? You have taken it on the lease and you'll say that okay, at the end of the lease I will purchase the asset. Okay, it is only an option. Okay, it is an obligation. You will have the right but no obligation. Okay, you have the right but no obligation. Term A, if you are breaking any in between, you have taken it for 5 years and you want to cancel it for within 3 years, definitely there will be some penalties. If the lease term reflects expectation that if it is part of terms and conditions. Is it? If it is going to be part of terms and conditions, then you have to pay the penalty. Okay, you have to pay. What is the residual value guarantee? When the lessee guarantees that the underlying asset at the end of the lease term will not be less than a specified amount. Is it right? You are taking the asset at the beginning. Okay, you are taking the asset at the beginning for 10,000. This is in the beginning. Is it this? Now what will happen? You have taken it for how many years? You have taken it for 5 years. Is it? Now you are a lessee. Okay, you are a lessee. Okay, this is what you are a lessee. You are giving the guarantee that see what will happen the moment you use the asset, the value of the asset will decrease. That the value of the asset will decrease. You are giving a lessee will give guarantee that minimum after 5 years. Okay, minimum after 5 years the value will be 2,000. That is the residual value. Concepts is very, very clear for us. Is that now? When you do the present value, here we have said present value. Whenever you are doing the present value, we should know what is the discount rate. We should know what is the value of R. Is that why you should know what is the value of R? Okay, what is the what? The discount rate applied should be the implicit rate. Means you should know what is the rate for that contract. If it is not data, it is not given, then they will give very clearly. Okay, they will give very clearly incremental borrowing rate, the rate at which it borrow funds to purchase a similar asset. If the discount rate is not given, they will mention what is, if you are doing a similar business, so you are purchasing a similar asset, what will be the rate of interest. Okay, that is the value of the R we have to take whenever we are going to calculate the present value. When you are going to calculate the present value as such. This is the first one. This is the liability part. This is the liability part. The second part, I will say, this is the liability part. Okay, this is the liability. What is the asset part? Definitely, you are taking the asset on a lease. You have to recognize at cost. Liability should be recognized on the present value. See, this is the difference. Liability should be recognized at the present value. Asset should be recognized at cost. Okay, asset should be recognized at cost. Okay, this is the most important thing. Underline. Okay, underline the thing so that you will not. Liability should be measured at the present value. Okay, liability should be measured at the present value. What is as per IFRS 16? What is the initial cost of the use of asset? How much is the initial measurement? Is the initial measurement of lease liability? Is it? You should take into consideration what you should take into consideration the present value of lease liability plus any you have made any payments made before or after. If you have made any advance payments, okay, if you have made any advance payments, you have to add, okay, any prepayments, you should not discount it. You should, anything you have paid in the beginning of the lease, very clearly at the beginning of the lease. Any initial direct cost, any cost of removing or dismantling of the asset at the as per the conditions. Okay, you have taken the lease for 5 years. Okay, after 5 years, what is there? You have to have a dismantling cost. This we have done in the IS 16. Okay, in the IS 16, whatever we have done in IS 16, except that, is it right? These two are there in IS 16. Okay, these two are there in IAS 16. Okay, the same rules are there in IAS 16. Is it? So we have to take the present value, we have to take anything we have paid in advance, we have to any direct cost initial, and any removing or dismantling cost. Any incentive payments received by the lessee are deducted from the initial value. Sometimes they will give discounts. Okay, they will give discounts. If there is any discounts are there, we have to deduct from the right of use of asset. Okay, right out. This is the second part. Okay, this is the second part. The third part is the lease payment. To calculate the initial value of the liability and the right of use of asset, they must consider the length. What is the duration of the lease? It should be it is non-cancellable. It is a period covered by an option. See what we'll do, we'll take it for 2 years. Okay, we'll take it. Then what happened? We will make an extension. We'll make it for further 2 years. Okay, period covered by the option to extend the lease if reasonable certain to be exercised. Period covered by the option to terminate the lease if there is certain not to be exercised. We'll say that after 2 years we may continue or we may not continue. Either they are giving the both the options. They are giving the period covered to extend the lease. They are also period covered to terminate the lease. Okay, means you should be very clear. Non-cancellable if there is extension, or what are the conditions for termination. Okay, what are the conditions for termination? We have to make sure about this. Are you clear about this?
Yes.
Okay, read this. Okay, simple one. Read this. Now, what they say, calculate. What they are asking you, calculate the initial carrying amount of the liability, right, and the right of use of asset. Provide the double entry, the general entries needed to cover the dynamic records. Is it right? First, this is the point number 1. Okay, this is the point number. This is the point number B. Okay, and this is the point number C. Okay, this is the point number A, point number B, and point number C. First, you have to calculate the initial. On January 1st, Dynamic entered a 2-year lease for a lorry. The contract contains an option to extend the lease for another 1 year. Dynamic believes that it is reasonable certain to exercise the option. Means they will extend it for 1 year. How much is the life asset is 10 years. You are taking it for only 3 years. You are taking initially for 2 years and again you will extend it for 1 year. Lease payments are how much? 10,000 for the initial terms. Means for the initial terms is how much? 2 years. And for the third year extension, it is how much? 15,000. if the option, if we are making an extension. All the payments are due at the end of the year. Okay, if it is at the end of the year means it is in the arrears. Okay, arrears means at the end of the year. Dynamic incur initial cost of 3,000. The rate of interest is readily determined. The incremental rate of borrowing is how much? The incremental rate of borrowing is 5%. Read once again. This is paragraph point 1, it is paragraph 2.
Doctor, you said they took lease for 3 years, but here they mentioned first line, Dynamic entered into 2 years lease.
There is a 2
That's
years. Is it? The contract has an option to extend the lease for another year.
Okay.
Okay, see that is the reason Hassan. There is it for there is a contract. Okay, to extend it for another year, for another year. Okay, means what will happen? It will be 2 plus 1. It will be how many years?
5
3 years. First 2 years, how much is the lease payment? 15,000. Third year, how much is the lease payment? 10,000. First 2 years, it is 10,000. Okay, first 2 years, it is 10,000. Then third year, it will be how much? It will be 15,000. Keep calculator ready. Okay, keep calculator ready. Okay, the first one. Okay, first one, what is the initial? Okay, first one is initial carrying amount. Initial carrying amount. Okay, initial carrying amount of lease liability. Is that we have to take into consideration how it will work. Okay, then if that is the case, okay, if that is the case, how much is the initial carrying amount at the end of the year? How much we are paying? Is it at year? Okay, year ending. Okay, year ending. Okay, how much is the cash flow year ending? Cash flow is how much? Is that we have to take the discount rate. We have incremental rate. Okay, incremental borrowing rate. Okay, this is the incremental borrowing rate, discount rate. And what we have to do, we have to calculate the present value. Now, how much is it? They have taken 1st January. Year ending will be how much? Year ending with 31st December. Are you clear about this?
Yes.
How much they are paying at the end of the first year? They are paying at the end of the first year 10,000. Is it right? Discount rate will be how much? Discount rate is 5%. Okay, discount rate is 5%. Is it right? 1 divided by 1.05 to the power of 1. How much will be the present value? $10,000 divided by 1.05. You can put like this. 10,000 divided by 1.05 to the power of 1. It comes to how much?
9523.8.
95. Don't take decimals. Round off it.
9524.
9524. Okay. Now, in the same case, 3112, second year. Okay, second year, 10,000. Okay. I'm not writing this, is that just for your understanding. 10,000 divided by 1.05 to the power of 2. How much you'll get? Quick. 10,000 divided by 1.05 to the power of 2.
It will be 9070.
Okay. Now, see, third year it is different. Okay, third year it is different. What is the difference in third year? Third year is it is not 10,000. How much they are paying? 15,000. Are you right?
Yes.
Okay, this is what, see, it is not difficult. Okay, 15,000 divided by 1.05 to the power of 3. How much you'll get?
$12,957.
Total how much? Only this last column.
Thirty-one thousand five hundred
31,550. 51, sorry. 500. Are you clear about this?
Yes.
Okay, this is the point. What is the point B? Point B is nothing but the initial cost. Okay, initial cost of right of use of asset. If you are taking the initial cost, what is the procedure? First, you have to calculate the initial lease liability. How much is the initial lease liability given in A? How much is there? 31,551. Okay? Then we have to add. Okay, this is a process. We have to add the direct cost. How much is the direct cost? Direct cost is 3,000. It is there?
Yes.
Okay, how much is there? It is going to be 34,551. Is it okay?
Yes.
Now, third one is what? We are talking about general entries. Okay, we are talking about the general. For general entry for lease liability. What is the general entry for lease liability? Can you tell me, please? Provide the double entries needed to record these amounts, okay?
So lease credit.
Is it right? Is it right? Lease liability will be credit. How much is the lease liability? Lease liability will be 31,551. Is it okay? Is it 31? How much is the right of use of? Is it right? Lease liability is this much. 1 minute. Can we do this like this? No. Debit will be the lease liability, okay? Debit will see, lease liability is how much? 31,551. Is it right? Don't put it like this, okay? Lease liability, if it is putting it, see the thing. How much is the asset is there? How much is the asset? This is the right of use of asset. How much is the right of use of asset?
31,000.
How much is the right of use of asset? 34,551. Again, 1 minute. Is it 1 minute? 1 minute. We have to make, okay? Initial right of use of asset consists of two things. Right of use of asset consists of two things. One is with respect to 31,551 and the second one is it right? 1 second, 1 second, 1 minute. Right of use of asset. I don't want to, I just want to. Okay, how much is the right of use of asset? Right of use of asset is 34,551. Okay, 34,551. Now, okay, how much is the lease liability? Lease liability is 31,551. Are you clear about this? Next, we have paid cash, okay? We have paid cash. How much we have paid cash? We have paid cash of 3,000. Are you clear about this?
Yes.
Okay, this is the general entries. It is the easiest chapter. We have to be very clear on this.
All the questions same technique.
Tell me please.
The question like this same technique.
100% same. 100% same. You are doing here or you are doing in SBR. 100% same. It will not change. First you have to calculate the initial carrying amount of the lease liability. Then you have to calculate the initial cost. Then you have to make the general interest. Only thing is they will add, but they will not change. They will add some more points, but it is, I'm telling you again, it is, I'm not saying 99%, I'm saying 100%. First we have to calculate the initial lease liability, then we have to calculate the right of use of asset, then we have to make the general entries. It is initially. We are talking about the initial. Are you clear about this?
Yes.
Okay. So, can I go to the next one?
Yes.
Okay. Now, subsequent. Now, what you have done? You have taken it for how much? You have taken it for 3 years. Okay. You have taken it for 3 years. What will happen when you have taken? See, whatever the outstanding amount, on the outstanding amount, they will charge interest. Closing balance, year-end closing balance. Calculate as the outstanding liability multiplied by the discount rate of multiplied. We are not dividing. Multiplied by the same incremental rate. Okay, this interest is also recorded in the profit and loss account. Whatever the closing outstanding amount is there, on the outstanding amount, closing balance. Okay, closing balance will calculate the interest, and that interest will increase the lease liability. Okay, lease liability. The interest is also recorded in the profit and loss. What we'll do? We calculate the interest. Okay, automatically lease liability will increase. If the liability is increasing, it will be credited. It will be credited. Like that. Now I will show you. Is it right? Now when you pay the lease payment as a lessee, automatically what will happen? The liability will decrease. If the liability is decreasing, debit will be the lease liability, credit will be the cash. Okay, credit will be the cash. Okay, now I will just check whether what they have mentioned. No, they have not mentioned. Okay, they have not mentioned anything. Little bit, very quickly. Okay, very quickly. I will put it like that. In the before case. Okay, if it is a payment in arrears. Okay, payment in adjust. How much you have calculated the lease liability. Lease liability is how much? Lease liability is 31,551. Okay, 31,551. To work out the interest and year-end liabilities, a lease liability table is often used. The layout for the table will depend whether the payments are made at the end of the year. If you are paying at the end of the year, it is in arrears. If you are paying at the beginning of the year, it is advanced. They will mention clearly whether it is at the end of the year in arrears, or they will say at the start of the year. At the start of the year. Okay. Now here it has been given. Okay. They are using it in the syllabus, it is there, then we will do. Okay. They will give the opening balance, interest they will calculate on the incremental borrowing rate. Is it incremental borrowing rate? Okay, multiply. Okay, they will, and any payment is there, it will be deducted, and closing. Is that this is 1, this is 2, column 2, this is column 3, this is column 4. Okay, what is the column 5? Column 5 is 2 plus 3 minus 4. Okay, 2 plus 3 minus 4. Okay, this we are paying at the end of the year, arrears, at the end of. If you are talking about the beginning of the year, okay, whatever the opening balance, from opening balance we will pay beginning of the year, is it? Means on that we are, after paying the lease payment, we will calculate the interest. Okay, of this this is 1, this is 2, 3, and this is 4. 4 is nothing but 2 minus 3. Okay, 4 is nothing but 3. This is column number 5. Okay, 6 is nothing but 4 plus 5. 6 is nothing but 4. Means whatever the subtotal is there, on that you will calculate interest. Okay, now when we do the thing, this is where we are talking about the classification. Okay, this is where we are talking about that. This is very important. Every other chapter, wherever there is a classification, it makes sense. Means if it is if you are paying next 12 months, is it? If you are paying in the next 12 months, it will be current liability. If you are going to pay beyond 12 months, okay, beyond 12 months, it is going to be non-current liability. I'm giving you, I'm giving you the information. As we are applying those things, we are applying these rules. It will never change. Keep it in mind. It will never change with all that assurance. Okay, with that also. We have to know what is the opening liability, what is the amount of interest we have to do, how much you are paying the lease payments, and what is the closing balance. In the closing balance, we are going to show in 2 different ways. Okay, what is the current liability and what is the non-current liability. Okay, there is no that much difference. Okay, only thing is what happening. You are the columns has been changed with because it is paid in advance. Okay, paid in advance. After paying the advance, you will calculate the interest because you are paying in advance. On the statement of financial position, the total liability at the end of year one, I told you, will be split. What it will be split between the non-current liability. This is what I told you, between the non-current liabilities and current liabilities. For payment made in advance or arrears, non-current liabilities representing outstanding amount immediately after the payment in year two. There is only the things for payment made in advance or arrears. What is the amount of outstanding immediately after the payment in year? The difference between the total liability at the year end and the non-current total liability and non-current liability is the current liability. Okay, I am highlighting this. Okay, the difference between the total liability and the non-current liability will be the current liability. Now, note that where payments are made in advance, non-current liability is not the outstanding balance. Only thing is that they will not make that much confused. I can say, okay, they will make it very specifically made in paid in advance or paid in arrears. Only thing is we have to be little bit careful on that. Okay, on that. Are you clear about this?
Yes.
Okay, now what is the right of use of asset? The right of use of asset is using the cost model, unless they say any specific model. Otherwise, it is always a cost model. This means that asset is measured at the initial cost less accumulated depreciation or impairment. Is it right? We have to know whether there is any accumulated depreciation or there. We have to measure. Okay, we have to calculate depreciation because you are a lessee. You are a lessee and you are taking it on a lease basis. You are taking it for 3 years or 4 years. Every year you have to calculate the depreciation. Depreciation is calculated if the ownership of the asset transferred to the lessee at the end of the lease term, then depreciation should be charged. You have to charge. In one of the questions they say, what is the life? Life is going to be 10 years. But we have taken the lease it for how many years? We have taken lease for 3 years. For these 3 years, you should charge depreciation. Is it? You should charge. They will mention it is a straight line method or it is a percentage reducing balance method. The information will be clearly listed. Otherwise, depreciation is charged over the shorter of the useful life and the lease term. Is it? They'll mention whether what is the 3 years. If you have taken it 3 years, we have to charge for 3 years. Is that whatever the life of the asset, we have taken it for lease. Are you clear about this?
Yes.
Just read once. Right of the use of asset.
Done.
Okay? Now, see the thing. They gave you an example. If it is in arrears, okay? If it is in arrears, how you have to calculate. Is that if it is an year, so you have to calculate a complete solution. A complete solution here till here. Okay, slowly we have to do. Make it very slowly. Okay, understand each and everything. Okay, they have they have an agreement to lease an asset. The terms is as follows. Primary period for how many years? First, initially it is 4 years. Okay, 4 years from January to with how much you are going to pay? 2,000 per year. Is that when you are paying? We are paying on at the end of each year. If you are paying at that in December, then it is going to be in arrears. Okay, the present value what they have already calculated. We are not calculating any present value. They calculated present value is 5710. What is the rate of interest? Rate of interest is 15%. Is that rate of interest is 15%. This is a step 1. Okay, I will put it like this. I will put it as a step 1. A non-current asset, right of use of asset. Is that we have there is no direct cost, nothing is there. Only lease payments are there. If there is a lease payment, that is equal to the value of the right of use of asset. If the value of the right of use of asset is 5,710. For how many years we have taken? We have taken it for 4 years. If we have taken it for 4 years, we have what we are doing? We are calculating the annual depreciation. Is the annual depreciation. How much is the annual depreciation? 5710 divided by 4. It comes to how much? It comes to 14828. Are you clear about this?
Yes.
Now, how much is the initial liability? Initial liability is 57. Is that a total interest expense for the lease is recorded, is calculated. Difference between the how much is the see the thing. How much you got it for 8,000 every month? How much you are paying every year? How much you are paying? 2,000. Is it there? Every year, how much you are paying? 2,000. 2,000 times 4 years. It comes to how much? It comes to 8,000. This is the total value. But the rule says that we have to calculate the present value. Okay, we have to calculate the present value. In the end, with interest, it will be at the end of 4 years, it will be 8,000. Okay, it will be 8,000. That is the reason. Okay, the total interest. The initial value is how much? Initial value is 5710. And what is that? There is a difference of how much? 2290. This 2290 is nothing but the interest expenses. Is that interest expenses accumulated? Okay, interest expenses accumulated for 4 years. It is given here. Is it? It is given here. The allocation of this to each rental period is calculated. This is what it says. This is the column number 1. This is column number 2. Column number 3. Column number 4. Column number 5 is 2 plus 3 minus 4. Is it 2 plus 3? How much is the initial liability? 5710. Are you clear about this?
Yes.
Multiply by 15%. It comes to how much? Do it on calculator.
856.5.
Forget about decimals. Don't take decimals. Never take decimals. Make it a rule. Okay, you round it off. Make it because we are doing in the Excel. Okay, we will do it. I will train you in that also. Okay, how much payment is how much? Are you clear about this? This is okay.
Yes. Yes.
This is the closing balance. Okay, this is the closing balance. This will be the opening balance. 4, 5, 6, 7. Again, you are charging 15%. Okay, you are charging 15%. Is that this plus this minus 2,000? You will get the closing balance. Again, you will charge this plus this minus this. It comes to 1740. 1740. Again, you will charge interest on the closing balance. It comes to. Are you clear about this?
Yes.
Okay, this is the same process. Process will not change. Okay, process. The above for see now you are asking the thing they are mentioning. The format above will be used whenever the payments on the lease are made in arrears. The format will not be changed. If the payments are in advance, only thing is you are deducting it from the capital sum at the start of the period. If you are paying in advance, that's all. Otherwise, if you are paying in arrears, it will be same. Now, what they are asking us, they mentioned clearly. They are asking us to make it for when? They are asking us to make it for only for 1 year. December. They are entered it when they have entered on 4th January. They are asking it on 31st December. Okay, they are asking for 31st December. If they are asking for how much we have calculated depreciation, is that it is only an extract, no total. Okay, don't do any total. You have to make statement of profit and loss account, statement of financial position. Extract means only presentation. Nothing should be in total. We have calculated depreciation. It is there with you 1428. Here we have calculated 1428. It is there.
Yes, I put the percentage.
How much is the interest is there for the first year? 857. It is there.
Yes.
That's all. You should only then. Okay. Here we is it only we have to mention. Now what is the? This is the it is the right of use of asset. Is it minus depreciation? Are you clear about this? This is the carrying amount. Are you clear about this?
Yes.
Okay. Now lease liability. This is very important. Okay. This is very important. How much is that? How much is the closing balance? This closing balance will be divided into non-current liability and current liability. Is it between non-current liability and current liability? How much is the closing balance? Is the closing balance? See, very simple. Closing balance. How much is the difference between these two? The difference between these two. How much is the four? See, what they say. I don't want to put that here only. 4587. Okay. 4587. 4587 minus 3252. How much you will get? How much you will get? You will get 1315. Is that 1315 is the current liability and 3252 is the non-current liability. Are you clear about this?
Yes.
Only this is very important. Wherever you do, whatever you are doing, classification is very, very important. Classification in terms of assets or in terms of liabilities. If you take the in terms of liabilities, non-current liability and current liability. In terms of assets, non-current assets and current assets. Is that classification is very important. Okay, they will test because this is the way you should be have a very clear what we are going to pay in the next 12 months. That is the current liability after reporting date. Okay, after reporting date. Are you clear about this? Next. Is that next? We have taken test your understanding. The question is from the previous test your understanding. The one we have done, dynamics, okay, in respect of the lease agreement for the year 35. Prepare extract. Okay, where it is the test your understanding about this one. Is that we have done here. Okay, test your understanding. They are asking us how much is the lease payment, how much is the depreciation. Okay, how much is the depreciation, how much, same thing we have to do. Depreciation, interest expenses, current assets, current liabilities, non-current liabilities, and the right of use of asset carrying amount. Okay, the same thing. Okay, the same thing. Fine. No. What we have to do first, tell me?
Statement of profit and loss.
Statement of profit or extract, okay? Extract. Just refer, I am putting it, okay? Statement of profit and loss account. Is that statement of profit and loss account 31st December 2001. Okay, how much is the depreciation? What is the right of use of asset? Is that what is the right of use of asset?
34551.
3434, is it right? 1 minute. Is it right of use? Depreciation is right of use of asset. I am writing for our understanding, divided by number of years. You should not write this, okay? 3 4, how much is there? 34551, is it right? 34551 divided by 3 years. For how many years we have taken? We have taken it for 3 years.
It will be 8637.
8637.
Or we can make it 8638.
It's up to you. That is not, no, check again. Check again. Check again. 3 years. It is not 4 years.
Okay, 11,570.
How much? 11,000?
517.
Good. Okay. Now, how much we have paid? This we are doing where? This we are doing for the statement of profit and loss account. Okay. Statement of profit. Is it right? Now, what are the things you will have? You will have the interest expenses. How much you have paid interest expenses? How much we have paid interest expenses? We have paid interest expenses how much? We have paid no lease liability. We have not calculated that. We have not calculated. Is it lease liability? Initial lease liability. Okay. Initial lease liability. No, we have to now. We cannot do like this. We cannot do like this. 1 second. 1 second. Okay. 1 minute. Okay. We cannot do like this. Okay. We have to make the table. Is it right? We have to make the table. 1 minute. Lease liability table. Then only we can work it out. Okay. Then only work it out. Year 1, year opening balance, cash interest, cash payment, 1 minute. Interest, cash payment, closing balance. Okay, we cannot do like that. Year 1, 31/12/2001. Opening balance is how much? We have calculated. Lease liability 31,551. Is it there?
Yes.
Interest is at the rate of how much? 5%. Check.
Yes, it's fine.
How much it will come? $31,551 times 5%.
1578.
1578. How much you are paying lease payments? 10,000. Yes.
Yes.
Now, how much you will get? This plus this minus this. 1, 2, 3, 4, 5 equal to 2 plus 3 minus 4. How much you will get?
23129.
23129. Okay. Now they are asking for 1 year, but if we do for 2 years, then we know what is the current liability and non-current liability. Otherwise, we will not get. Is it right? We will not get. How much is the opening balance? 23129. Are you clear about this?
Yes.
What is the rate of interest? 5% on 23129.
1156.
1156. How much is paying 10,000? It comes to how much?
14285.
14285. This 14285 is the non-current liability. Okay, this 14285 is the non-current liability. Now we want to know what is the current liability means. 23129 14285. How much is the current liability?
8844.
Are you understanding?
Yes.
Slowly, the more we get, is it right? Now it will be clear for us. Okay, without doing this, how much is the interest expenses we are paying? We are paying an interest expenses of 1578. Okay, we are paying an interest expenses of how much? 1578. This is the statement of. 1 minute. Here we have to write it. We are paying interest expenses of how much? We are paying 1578. Okay, we are paying. This is the minus. Okay, this is the. Now we have to take into account. This is the first segment. Okay, now we are talking about the extracts. Okay, with respect to statement of financial position. Okay, statement of finance. In the statement of financial position. Okay, in the statement of financial position. In the statement of financial position, how much is the non-current asset? Non-current asset. Okay, I'm writing this. How much is the value of the non-current asset is how much? 34,551. Is it there?
Yes.
Minus depreciation. Okay, minus depreciation. How much is the depreciation? 11,517. How much we'll get here? How much you'll get here?
23034.
23034. Okay. This is one. Next, what we have to take? We have to take non-current liabilities. Okay. We have to take. We have calculated non-current liabilities. How much we have calculated non-current liabilities? Here we have calculated. Only put it. Nothing is there. Only just put the non-current liability. Don't do any total. 14,285. You have the current liability. How much is the current liability? Current liability is how much? 8844. Are you clear about this?
Yes.
Don't do anything. Okay? Don't do anything. That extract means you have just simply you have to mention. Is it okay?
Yes.
Okay, we can write general entries for the depreciation, interest expenses, but they are not asking us. They are asking us only to prepare the extracts. Is it okay?
Yes.
Next. This is with respect to the, can I go to the next one?
Yes, sure.
Okay. Now, this is with respect to the, now when you do the thing, there is a short life. Is it? Short life is nothing but 12 months or less. Okay, 12 months, low value. Okay, then it is a straight, simply treatment is there. In this asset, the lease can choose to recognize the lease payments directly in the profit and loss account on a straight line basis. Okay, no, we are not going to have any lease liability. We don't have any right of use asset will be recognized. In simple terms, we cannot say that, but if we take less than 12 months, it is like a rent. It is like a rent, but we should make it very clear, okay? Because of low value. What is they have given the examples. This will be mentioned somewhere in MCQ. Okay, this will be somewhere in MCQ. IFRS 16 does not specify monetary amount. They say not that there is a monetary amount, what is the low value, what is the high value, but which an asset should be considered as a low value. There is a sum indicates that less than $5,000. If it is less than 5,000, but this is not a condition. This is only a idea. Is it right? It is only an idea. But what are the examples of low valued assets? Taps are there, okay? Taps are there, computers are there, telephones are there, small items of office furniture. Okay, small items of office. Now, here they have mentioned very clearly, is it? It is very, is it? The assessment of whether an asset qualifies a low value must be made on its value when it is purchased, when you have purchased new. Means you cannot say the old asset. A new asset, new tablet, new personal computers, new telephones, new small items. We cannot say old value, okay? We should not take the old assets. Car will not qualify as a low value asset. Wherever I am putting star marks and underlining it, be very specific. Car will not qualify even it is very old at the commencement of the lease. Means car will, if you are taking a car on lease, make it a lease payment. Okay, lease. Okay, even you are taking it for a short term, we should not take it as a short value assets. Okay, because what will happen, sometimes you will take car for 5 days, sometimes you will take car for 1 month, 2 months, 5 months. Is it right? 5 months means if it is there, you cannot treat it as a low value. Exceptionally, they are making it very clear. They are not talking about anything else. They are only talking about the car as a will not qualify as a low value asset. Are you clear about this?
Yes.
Okay. Now, how we have to treat it as a low value asset? Okay, low value asset. Okay, on 2006, Taggart acquired telephones for sales under a 2-year lease agreement. That lease required an initial payment of 2,000, then you are going to pay 8,000 next 2 years. Means first year it will be 2,000, the second year it will be 8,000, and the third year it will be 8,000. This is year 1, this is year 2, this is year 3. So the impact of this arrangement on financial statements for the year ended. Okay, for the year end. What the IFRS lease permits were simplified treatment for assets with a lease period of 12 months or less. But here they have taken it for 2 years lease or low value. Although the standard does not give a numerical definition what is the low value, it does give examples of assets that can be included in the low value. Which assets you can include? Telephones. Because here they have what they have done, they have taken the telephones on lease. Okay, they have taken a telephone on lease. The simplified treatment allows lease payment to be charged as an expense. Okay, now how much they have taken means you have to divide it in equal basis. Okay, total rent payables. This is the step one. Okay, this is the step one. Total rent 2000, 8000, 8000 by 2 years means how much will be there? 9000 per annum. Okay, now what they have said when they have acquired, this is very important. Okay, this is very, they have acquired on when? This is the 1st January. Okay, this is the 1st January. Okay, 1 minute. Huh, this is the 1st January. What is the year ended? This is the year ended. Okay, year ended. Year ended is given how much? Year ended is 31st December 2006. They acquired on when? They acquired on April. If they acquired on April, okay? If they acquired on April, okay? How many months you have to take? We have to take only for 9 months. Any doubt? Ask me. How much is
The
that?
actual payment would be April.
Yeah, they have taken it. They have a contract on 1st April. Yes, they have Yeah, actual payment will be on 1st March. Yeah, the payments will be there on 31st March and 31st March 2007 and 2008. But our reporting period is where our reporting period, our year ended. Our year ended is 31st December. If it is our year ended is 31st December, they have made it for how much? They have made it for, this is the 31st March. Fine. But we are talking about what? We are talking about our reporting date. In reporting date, we have to take it for how many months? 9 months. Are you clear about this?
Yes.
Dates are very important. Okay, dates are very important. They have taken, even they are paying the average 9000, they will account it for 9 months only. The expense or the period is how much? 6007 is not the same as 2000. So we need to accrue an additional expenses. How much we are going to pay? We are paying to pay 2000. Still we have to pay how much? The difference amount. Is it? Still we have to pay 6750 minus 2000. In the statement of profit and loss account, we will put it as how much? 6750. Whereas in the financial statement, we will say accrual. We will show it as a outstanding. Is it okay?
Yes, but see, at first you mentioned for first year 2000,
Huh.
second year 8000, third year 8000. But
Huh.
here on calculation, they divide all these amounts by the years.
Huh.
And the total is 9000 per annum.
Huh. They have taken it for how many years lease?
2 years.
2 years. Is it? That is the, here how many they have divided? They have divided by 2 years. Advance how much they have paid? They have paid an advance of 2000. This is in 2007 and this is 2008. Are you clear about this?
Okay.
Okay. Is it fine?
Yes, it's fine.
Okay. Understand. The most important thing is to understand and keep it in your memory. The moment we are doing the exam kit, I will tell you in advance. Tomorrow we are going to do this. Then you revise. Again you have to, second time you have to revise. Once you are doing second time, automatically you will do it on your own.
Inshallah.
Inshallah. Okay? Next. Fine? Now, little bit more specific. Okay? I break this one. Once we complete this, we can take that one. Okay, if the company enters a lease part way through the middle of the year, okay, what we have to do is simple. We have to take depreciation and interest will be with respect to the time of portion. Number of months, 6 by 12, is that 6 by, if it is for 6 months, 6 by 12, 9 by 12, 3 by 12, whatever the period is, the time of portion. The liability is likely to need extra column to split between the pre and post payments. We have to make it very clear. Presentation is very important. Okay, whether it is a mid-year, middle of the year. Now, if it is a middle of the year, they gave you example. Okay, they gave you an example. Shaheen entered into an agreement to lease an item of plant. When they have entered, see what is the reporting period? Year ended is how much? Year ended is 31st December. March. Okay, 31st December, March. Now it is 31st March. When they have entered on 1st October 2008. Okay, 2008. Here how many months will be there? It will be 6 months. It will be 6 months. Okay, 6 months. They have entered the contract. Fine, that's okay. Okay, the lease required 4 annual payments, 2000 each, commencing 1st October. The plant has a useful life of 4 years. Lease is for 4 years, plant is for 4 years. At the end of it will be scrapped to what this period. The present value of lease payments is how much? 700,000. There is no direct cost. Is it? There is no direct cost. What is the rate of interest? Rate of interest is 10%. Is it? Rate of interest is first make it sure, do workings. Don't go to the things. First do working. This is the working one. Okay, how many years? See they say that the present value of lease payments is 7. It is equal to what? It is equal to right of use of asset. You don't have any additional cost. Liability will be equal to the asset. Are you clear about this? Depreciation. Working one. Is it? Depreciation is how much? 700 divided by 4 because it is given it for time apportioned. Is it right? It is time apportioned. We have to take only for the 6 months. Okay, we have to take it only for the 6 months. Now, what they have said that it is the interest also we have to take 6 months. Okay, interest also you have to take 6 months. 31st, is it right? How much is the opening balance? 700,000. How much you have paid? They are paid in advance or they are paid in arrears?
No advance, they said commencing.
Commencing on first, is it right? Commencing in advance. Okay, they paid in advance. Paid. How much is? See now you understand. If they have paid in advance, you should not calculate. How much is the balancing amount? Balancing amount is 500. On the balancing amount, you have calculated interest. Okay, only for 6 months. Only for 6 months. Closing balance is how much? Closing balance is 525. Then 525 again because they are asking for how much? They are asking for the they are asking for 31st March, okay, 31st March, 525, okay, 31st March 2010, 525, 10 by 12, 10 by 100, again they have taken it for 6 by 12. Why they are doing it? They are paying the advance payment when they are going to pay payment on when they are going to pay payment on 1st October. Is it? They are going to pay on 1st October. Means you have to calculate interest for 1st October only. Okay, 1st October for next 6 months. Okay, I am giving you this. Okay, here is it? Here they have calculated for 6 months. Again they have calculated for how much? Again they have calculated for till 1st October. They have calculated for 6 months. Okay, they have calculated for 6 months. Okay, how much is the 6 months? It comes to how much? 525, 525 plus 25 minus 200. It comes to 350. Check. Five 25 plus 50, 550. 550 minus 200. Closing balance is how much? 350.
Yes, 350.
Okay, fine. Now, what we have to be very clear. Okay, we have to be very clear. How much we have calculated depreciation. See the depreciation. How much we have calculated? 87,500. Only for 6 months. We have calculated interest only for 6 months. Are you clear about this?
Yes.
Okay, little bit. If the question is difficult, okay, if the question is difficult, it will be like this. But if you practice this type of question, we can face the challenging questions also. Okay. Now what they have done, they have taken the value minus they have taken the depreciation. Is that they got the carrying amount? Is that they got the carrying amount? Is it okay? Now they got the carrying amount and there is a closing balance of the lease liability. Is that closing balance of the lease liability? What we have done here? Is it there?
Yes.
And how the closing liability minus the opening one. Okay, 525 minus same rule, same process which you have done. Okay, same process which you have done. 525 minus 350, we got the current liability. Now you can understand what we are doing from the beginning. We are only adding some few things, but we are not changing the steps as such. The same steps will be done with some plus or minus some specific things. Is it okay with you?
Yes.
Is it? There is no interest charge for the first half of the first year because we started when we started on 1st October. Then the interest charge for the first half of the second year. Is that it reflects the balance on 1st October. Once calculated, you have to split between what we have done. We have done 525. We have done 525 minus 350 as normal. Okay, as normal. Then we will say what is the current liability and what is the non-current liability. Is it okay?
Yes.
Okay. I will keep this for you. Okay. From here I will keep this for you. Okay, I will keep this. Other things I will do. Okay, I will, because those are the multiple choice questions. Is it right? You can refer. Only 1, 2, 3 questions are there. 1, 2, 3, 4 questions. 5 questions are there for you. Other things I will do on. We will do together. Okay, we will do together. Okay.
Okay.
Otherwise, I will make it the moment I sense it is going beyond our way. I will stop. Sale and lease back. It is a very normal term. Okay, it is normal term. People, I told you, I have an asset. Is it? I have a building. Is it? What people? What? Why I will take the building? It is the value of the building is 1 million. Okay, what I will do, I will say that I will sell it. The moment you will sell it, what you will get? You will get a cash. You will get a class. And then what we'll do, I will take it on a lease. Initially, I will be a lessor. First, in the beginning, I own the building. I will be a lessor. Then once I sell it and I will take it on a lease, my position will be changed from lessor to lessee. Lessor to lessee. This is the agreement. This is the order. First, if the entity, the seller, lessee, transfer an asset to another entity, buyer. First you will be a seller, then you will be a lessee. Okay, you are transferring asset to another entity. The person who is buying, the buyer will become what? The buyer will become the lessor. He will give you back on a lease to us, and it then lease it back from the buyer and lease it back from the buyer. The seller or lessee must assess whether the transfer is accounted as a sale. Is it? The transfer is accounted as a sale. Okay, we have to make sure. When you talk about the sale, which standard we are using, we have to give reference for IFRS 15. Whether the control is transferred or control is not transferred, we have to be very specific on that. Is that we have to be very specific on that. If control is transferred, it is a sale. If control is not transferred, it is not a sale. The judgment will be there on this. Okay, if that judgment, very simple, very very specific. Where there is a difficulty, I will tell you. First, if you are selling, then your role will be lessee. You are taking it back. The person who will buy, he will become a lessor. Okay. For this purpose, the seller must apply IFRS 15 whether the performance obligation is satisfied. This normally occurs when the buyer obtains control. If there is no control, no sale. You have to get the control of the asset. What is the control? Very important. Revise this point. Control of the asset refers to the ability to obtain substantially all remaining benefits. This will be tested in MCQ. Very important. What is the control of an asset refers to the ability to get all this is the normal standard definition of control. Okay, normal standard definition of the control. In financial reporting, sale proceeds will only represent the fair value of the asset. Sale proceeds. What is the sale proceeds? Will have only the fair value. Okay, whatever the value you are getting as on the date. Okay, that is again, these are the things, these are the rules, will never change. Okay, these are the truth, never change. What is the when the transfer is a sale? If a transfer does not qualify as a sale, then the seller must measure the right of use. If it is not a sale, then it is a lease. Is it? Then it is a right of use of asset. As the proportion of the previous carrying amount relates to the rights retained. See, again I am saying little bit more advanced, okay? After question number 3, I will stop, okay? It will be overloaded, okay? It will be overloaded, okay? If the transfer does not, if it is not a sale, is it? If it is not a sale, means it is a right of use of asset. You are giving an asset to somebody else. You are not selling. You are giving it asset to somebody else. It is not a sale. Then it is going to be identified as a right of use of asset at the proportion of the previous, whatever the amount is there. Okay. The initial value of right of use of asset. Is it the initial value? What is the lease liability divided by sale proceeds previous carrying amount? Lease life. What is if there is not a sale? Transfer is it a if it is not a sale, okay, then what we have to do? We have to know what is the lease liability, sale proceeds, is it the initial value of the right of use of asset. How you have to calculate lease liability, sale proceeds, previous carrying amount. This means that seller or the lessee will recognize profit or loss based on the rights transferred to the buyer. Because what is that? This is little bit challenging, is it right? When it is not, how you have to calculate? How you have to calculate? What is the right of use of asset? Means you are using the asset. In the middle, you will sell the asset, and how you have to know what is the value of the asset? What is the value of the asset? What they say, read slowly. Explain how blank can account for transaction on 1st January. Okay, correct. Slowly read. Again, I will revise this. I will revise this anytime, somewhere down the line, because I know this is the only one sensitive, critical part of this chapter. January 1st, okay, January 1st, okay, January 1st, 1/1/2004. Blank sells an item of equipment to Fume. How much? Fair value is how much? Fair value is 1 million. They are selling, okay, they sell, okay, no. The equipment is a carrying amount. How much is the carrying amount? Don't say it is a current asset, carrying amount. Carrying amount is how much? 800. Carrying amount is 800. The sale represents the satisfaction of the obligation as per IFRS. Blank enters a lease contract. Okay? Blank enters. See, you are selling and you are entering a lease contract. Again with the same company. Right to use the equipment. For how many years? 4 years. Annual payments. Okay? Annual payments is how much? 200. At the end of each year. The interest rate is how much? 9%. The present value of the lease payments is how much? 650. The remaining useful life is much greater than lease term. Means the remaining life is, you are taking it for how many years? You are taking it for 4 years. The remaining life is more than 4 years. It is if it is not there in your syllabus, okay, but I will tell you, okay, why they are told like this, okay. It is not there in our syllabus, but I will tell you. Now what is there? Keep it in mind. How much is the present? What is the formula? Keep it in. Formula is what? Lease liability. Is that lease liability divided by sale proceeds. Sale proceeds multiplied by previous carrying amount. Identify and do it. How much is the lease liability?
$650,000.
650. How much is the sale proceeds?
$200,000.
No. 1 million. How much is the sale proceeds? First line.
Fair value.
Fair value of he sell an equipment to Fume. How much he is selling? 1 million. Okay. Now, how much is the previous carrying amount? 800,000. It comes to how much?
$520,000.
520,000. This is what? This is the value of right of use of asset. Are you clear about this?
Yes.
Now, slowly see, when we are talking about these things, in reality it is like this. In this reality, it is like this. How much you are selling the asset? You are selling the asset for how much? 1 million. Are you clear about this?
Yes.
Okay? You are selling the asset how much? You are selling the asset for money. If you sell the asset, what will happen? You will get cash. Yes? Are you clear about this? Isn't it? You are selling the asset. What is the value of the asset you have sold? What is the value of the asset you have sold? For 800,000. Carrying amount is how much? Carrying amount of assets sold. Carrying amount of assets sold is how much? 800,000. Huh?
Yes, carrying amount is 800.
800. Okay, I'm changing the color. Okay. Now you have taken the asset, right of use of asset. How much right of use of asset?
520,000.
520,000. Okay, right of. What is the liability is there for that? Lease liability. Match the colors. Don't get confused. Lease liability is how much? Present value. How much is the present value of lease liability?
$600.
Are you clear about this?
Yes.
Next. What is the difference? Check. It is credit or debit? Which one is more?
Debit.
1 million. Okay, 1 million. It is how much? 520. Okay, it is how much? 800. It is how much? 650. Is it right? How much is there? 1520. What is the difference? Hmm? One five two zero. Okay, minus 800 minus 650. How much it will come? Is it okay?
No.
Huh?
800, you mean minus 800,000
Yes,
minus 6.
50.
No, I confused the calculation.
How you confused? Okay, tell me. How much is there? We have made debit. Okay, just check. What is here on the debit? What is the debit? We have made 1 million. Is it okay with you?
Yes.
Debit we have made 520. It is okay with you?
Yes.
Total 1520.
Yeah. It's
Credit
correct.
credit is 800.
Okay.
Credit is 650.
Okay.
Difference is how much? 1 million plus 520 minus 800 minus 650.
Okay. Yes. 70,000.
What is this? I will not tell. You have to tell. It is a profit or it is a loss. It is what? It is a
Profit.
gain, profit. Are you clear about this?
Yes.
Credit, is it right? Profit on sale. Is it okay?